What is going on, everybody? Thank you for joining me for another video. It is your host, Crypto Glenn. You could have been anywhere in the world, but you are here with me, and I appreciate it. There is something that we absolutely have to get to the bottom of before it gets a lot of people absolutely wrecked. So, like many of you, again, I've said this before, it's not anything new, but I watch other content creators' videos. It's a way that I use as a gauging metric to get a feel for what's going on in the crypto space at any given period of time. And plus, when I've got some downtime where I'm driving from point A to point B, it's good just to to turn on a podcast, if you will, or a video just to kind of see what's going on in the space. Something that I came across today was Crypto, his video about what he feels that Bitcoin is going to do next. And while I was watching the video, I got about halfway through it and I started to notice that he is starting to echo many of the sentiments that a lot of people who would be pseudo financial, quote unquote, experts or economists will say. And that is that the amount of money printing that has gone on over the last 2 years, some, 20-30% of the world's monetary funds, available funds, have been printed over the last year and a half. And to which they are not wrong, but to use that as the sole metric of getting an idea of where or why you think Bitcoin is going to skyrocket in 2022 may not be 100% correct. And I'll tell you why here. If you've been following me on TikTok, on Twitter, we've talked about it briefly on this channel. At the beginning of the month, we had a head and shoulders pattern that started to form. Prior to that, on December 3rd, we had an event where we wicked down to 42,400 area. And normally speaking, whenever you're looking at trading patterns, these wicks, they need to actually fill before you can actually start to, create the next pattern and move to the upside or farther to the downside. So I'm still actually looking for us to wick down into this $42,000 range. And I'll tell you why. When you look at the daily or the 4-hourly, we really haven't got too many, if any, significant closes over this 50% retracement zone whenever you look at the Fibonacci. And before you can actually think about moving to the upside, you need to have significant closes without actually retracing or giving back significant momentum. You need to have those closes at that 50 mark moving in the desired direction. You want to obviously see that, from where you were at. Let's just bring this down. When you go from the low to the absolute high, you want to try to see if you're going to retrace off these golden zones, the 382 or the 618. You haven't really come down to actually test the 718. However, again, if we're going back looking at that 42,400 mark, that is about the golden retracement zone. So if you come down and you touch that, to me, that would be a stronger indication that you're probably going to move to the upside instead of just not getting the significant closes off of this 50 that we see here. I mean, you've got a nice green candle going currently here right now, but you don't really want to start to give back too much of those momentum, have a candle close and go on to the next one. You actually want to see this, have a nice strong close and have the next candle create the same process if you really want the market to believe that this is a reversal. In my opinion, with this chop going on here, I just don't see it. I'm looking for us to actually retrace again back to this zone here before we actually start to move up. Now, if we start to get significant closes above this 50, then yeah, we could potentially have something to talk about. But I don't think that the turnaround is right around the corner as Chris from Crypto believes. The other thing that I want to bring to everyone's attention is that when you start to look at economic factors, and I look at everything in its entirety from a holistic standpoint as much as I can whenever I'm trying to figure out the determining factors as to where the market could possibly go. A lot of people just look at the charts, they look at crypto in a vacuum, and they don't really allow for any outside perspective. We have seen before when yield rates have gone up, when interest rates have been teased that they're going to go up, that has somewhat of a negative effect on crypto. So for a lot of people to be saying that the majority of the money that is in existence today has been printed over the last year and a half, and that's the reason that crypto is going to boom, I think you're already looking to the past, because here we have the Federal Reserve in 2022 is going to raise interest rates 3 times. They're planning on raising interest rates 3 times next year in 2022. And what this tells us is, you want to know where you're going, you have to look at where you've been. Whenever the interest rate on yields or bonds goes up, crypto takes a hit. Why? Because people will move out of crypto and they'll go into positions of cash, as it is seen to be a more traditional, a more safe asset class to be in. So if they're telling you that they're going to raise interest rates 3 times in 2022, you can bet your bottom dollar that there's going to be a significant amount of people who will leave crypto and move into cash, as it is seen as a safer alternative investment class. Now to that, some might be saying, well, why crypto? Why not, real estate, or why not the stock market? Because the stock market has been on a bull run for the last 11 years. And when these rate hikes happen, it makes the cost of buying money, the interest rate, that's what it is, the price that it costs to buy the money or borrow the money. I look at it as a price to buy the money that you want to borrow. That goes up. And when those numbers go up, businesses do not borrow as much. So they cut operations. They start to scale back. When capital is low, when it's cheap, businesses will use that to grow and invest in businesses. So the stock market could actually be looking at taking somewhat of a significant hit here. We're already seeing CEOs sell off decent sized positions looking to lock in profits, and understandably so. Well, you're not going to put that money into real estate because the cost of a mortgage, the interest on your mortgage, the cost that what it takes to buy that money, to borrow that money, is going to go up. So again, savings is probably going to look like a better alternative. So if you are following this individual here, I would caution you to take what he is saying with a grain of salt. And I would also caution you to start looking at crypto and the factors that affect crypto in a very macro place instead of a very micro, just looking at the charts, because you're missing a lot of data. Okay. That's really all I have for this. In my opinion, again, I want to see us actually go back to the $42,000 range, like the $42,400 range, before we even start to consider making a decent move up. This could be somewhat of a bear trap here. We're just going to have to wait until the subsequent days follow to see how we're actually performing. You still haven't even had a daily candle close above the 50, right? So again, here, remember what I said a moment ago. You need to go up and close above the 50 without giving it back. You gave all of this progression back here. You gave all of that territory that you gained above the 50, you gave that back yesterday. Will you do the same thing here? We don't know, but I would like to see significant closes above the 50 before I personally even think about changing my tune. You guys have know that I've gone on record and said, from our highest point at 69,000 to where we're at now, we've retraced 20%. Let's just go ahead and do the math on that real quick. You guys have known that I've been the one saying that, you're in a bear market. See, 26%. Anytime you fall at least 20% from your all-time high, that technically classifies you as a bear market. So I don't know why we're getting a lot of people saying that it's not a bear market when, at least by definition, it is. So we'll pay attention here. We'll wait and we'll see if this is in fact the beginning of a legitimate recovery, or if this is in fact a bull trap. We just have to wait and see. I can tell you right here, without any significant closes above the 50, that's been a pretty significant rejection line here over the last past 1, 2, 3, 4, 5 week and a half, right? So just be mindful of that. Don't make any rash decisions, and always wait for a confirmation. So I'll keep you guys updated on Twitter or TikTok, or even here on the YouTube channel. And honestly, guys, I just want you to be safe. I don't want you to get the wrong information from anybody. I want you to really consider all the facts and all the details before making a decision. And I want to be the one just to provide a little bit of objective reasoning to the mix. And don't even take what I have to say as the gospel. Use it as a point for your own research and do your own research, because, it's not financial advice. It's just an additional variable to add to the mix. I want to say thank you to the 1,740 subscribers that we have on this channel. It wasn't too long ago that we were looking at 600, 800, and this channel is just absolutely blown up. So I want to say thank you to each and every one of you. None of this would be possible without you. And my goal here is to just keep pumping out significant content that you all can appreciate. So I want to say thank you, and I will see you all in the next one. Peace.